Based on the provided data for Bitcoin, a cautious short-term strategy appears to be the most suitable approach. The recent price history demonstrates a period of consolidation with minor fluctuations, while the forecast indicates a potential downward trend over the next week. This suggests a limited opportunity for significant gains in the short term. Therefore, the strategy recommends entering a short position around $97,400, the price point near the recent highs. A stop-loss order should be placed at $98,000 to limit potential losses if the price unexpectedly rallies. The target price for this short position is set at $95,000, aiming to capitalize on the predicted downward movement. This strategy prioritizes risk management by implementing a stop-loss order and focuses on capturing potential short-term profits within the predicted price range. Based on the provided price information for Bitcoin Cash, a cautious approach is recommended. While the historical prices show a slight upward trend, the forecast suggests a downward movement over the next week. The support price of $316.1 indicates a potential floor for the price, while the resistance at $410.20 suggests limited upside potential. Given this outlook, a short-term short position is advisable. To execute this strategy, an entry price of $325 could be considered, aligning with the current price and the forecast's downward trajectory. A stop-loss of $330 would protect against unexpected price surges, while a target price of $310 allows for potential profit capture before reaching the support level. This strategy aims to capitalize on the anticipated price decline while managing risk through a defined stop-loss. Based on the provided stacks price information, a cautious investment strategy focusing on a short-term perspective is recommended. The historical price data reveals a fluctuating trend with a recent dip. Although the forecast predicts further declines, the support price at $0.864 provides a potential floor for the price. Considering this, a short position could be taken with an entry price slightly above the current price, aiming to capitalize on the downward momentum. Setting a stop-loss at 93 cents, slightly above the recent high, would help mitigate potential losses if the price unexpectedly rebounds. The target price should be set at 84 cents, aligning with the lowest predicted price in the forecast. This strategy allows for potential profits from the anticipated price decline while limiting risk by setting a clear stop-loss level. Based on the provided Ethereum price history and forecast, a cautious short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with a slight downward bias over the past 2 weeks. The forecast further suggests a continued downward trajectory, with prices potentially dipping below the current levels. This bearish sentiment, coupled with the proximity to the support price of $2,598.59, suggests a potential opportunity to enter a short position. An aggressive short-term strategy could involve entering a short position at the current market price, with a stop-loss set slightly above the recent high of $2,730. This would limit potential losses in case of an unexpected price reversal. The target price could be set at $2,540, aligning with the forecast's lowest predicted price, allowing for a reasonable profit potential while managing risk. This strategy capitalizes on the anticipated price decline while remaining mindful of potential market fluctuations. Given the price trends and forecast for XRP, a medium-term investment strategy seems most suitable. The historical price data shows a recent consolidation phase, with prices fluctuating around the $2.40 to $2.50 range. The forecast suggests a slight upward movement, with prices potentially reaching $2.65 to $2.75 in the coming weeks. This indicates a potential for modest gains in the medium term. Therefore, an investment strategy for XRP should focus on a long position. A suitable entry price would be around $2.45, allowing for a buffer below the current price and the support level of $2.42. The stop-loss should be set at $2.38 to limit potential losses if the price drops below the recent consolidation range. The target price could be set at $2.70, aligning with the upper end of the forecast and providing a healthy profit margin. This strategy allows for capital appreciation while managing risk within a reasonable timeframe. Based on the provided Binance Coin price data, a medium-term investment strategy appears most suitable. The historical price shows a generally upward trend, indicating positive momentum. The forecast suggests continued growth, with prices potentially reaching the resistance level. However, the recent price action suggests some consolidation before a potential breakout. Therefore, a long position is recommended. An entry price around $655, slightly below the current price, allows for a margin of safety. The stop loss should be set at $642.1, the support price, to minimize potential losses. The target price could be set at $682.51, the resistance level, aiming to capture a significant portion of the potential upside. This strategy allows for a balance between risk and reward, capitalizing on the positive price momentum while managing potential downside. Based on the provided price information for Stellar, a cautious investment strategy would be advisable. While the forecast shows a slight downward trend, the historical price data suggests a volatile asset with potential for both gains and losses. Given the relatively low support price of $0.3174, entering a long position at this point carries a significant risk of further decline. Therefore, a short-term bearish strategy with a short position appears more suitable. An entry price around $0.340, near the current price, would allow for profit-taking if the forecast price of $0.327 materializes. A stop loss could be set at $0.345 to limit potential losses if the price unexpectedly rises. The target price would be $0.315, aligning with the support level and providing a reasonable profit margin while mitigating risk. This strategy capitalizes on the anticipated price dip while remaining mindful of the inherent volatility of Stellar. Given the provided price history, forecast, and support/resistance levels for Toncoin, a cautious investment strategy with a medium-term perspective appears most suitable. The 2-week price change demonstrates a slight upward trend, but the 1-week forecast suggests a potential dip in the coming days. The support price at $3.706 provides a potential floor for the price, while the resistance at $5.302 indicates a significant hurdle for upward movement in the near term. Therefore, I recommend a long position with a cautious approach. An entry price around $3.75 would allow you to capitalize on any potential rebound from the support level. A stop loss at $3.65 would limit potential losses if the price declines as predicted by the forecast. The target price could be set at $4.10, aiming to profit from a moderate price increase towards the upper end of the recent trading range. This strategy balances the potential for gains with a controlled risk profile, aligning with a medium-term investment horizon. Given the price trends and forecast for Cardano, a cautious investment strategy would focus on a short to medium-term approach. The historical prices show some volatility, with a recent dip followed by a slight recovery. While the forecast suggests a potential decline in the coming weeks, it also indicates a possible bounce back towards the end of the period. This suggests a sideways movement with potential for short-term profit opportunities. Therefore, a long position is advisable with a conservative entry price of $0.750. The stop loss should be set at $0.735 to protect against further downside movement, aligning with the support price. The target price should be set at $0.800, aiming to capitalize on a potential upward movement towards the resistance level. This strategy allows for a moderate risk-reward ratio, aiming to profit from short-term price fluctuations while mitigating potential losses. Given the price trends and forecast for Litecoin, a medium-term investment strategy appears promising. The historical prices show a general upward trend, with recent fluctuations around the $125 mark. The forecast suggests a slight pullback followed by a potential climb towards $129. This indicates a bullish outlook in the medium term, making a long position advisable. An ideal entry price for this strategy would be around $124, aligning with the support price and offering a good entry point for potential upside. The stop loss should be set slightly below the recent low at $123 to minimize potential losses. The target price should be set at $129, capitalizing on the forecast's projected high point. This strategy balances risk and reward, allowing for potential profits while mitigating downside exposure. Based on the provided price history and forecast for Doge-Coin, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data shows a period of consolidation and slight decline, while the forecast indicates further downward movement in the coming weeks. This suggests a bearish outlook in the short term. However, the support price at $2.9931 acts as a potential floor, indicating a possibility of a rebound. Therefore, a strategy involving a short position with a target price slightly above the support level at $2.9931, around $3.05, would be prudent. The stop loss should be set at $3.32, the highest point in the recent price history, to protect against any unexpected upward surge. This approach allows for capitalizing on the potential price decline while mitigating risk. Holding the position for a medium term, around $2 to $3 weeks, could allow for a more significant price movement before reassessing the strategy. Given the price trends and forecast for Aptos, a cautious investment strategy would focus on a short-term approach to capitalize on the anticipated price decline. The historical prices show a downward trend in the past 2 weeks, with the forecast indicating further declines. The forecast suggests Aptos could drop from its current price to as low as $4.75, while the support price sits at $5.77 and resistance at $6.04. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy would involve an entry price of $5.90, aligning with the forecasted price. The stop loss should be set at $6.04 to protect against any unexpected price recovery. The target price should be set at $5.50, allowing you to take profits before the market hits the forecasted low of $4.75. Given the historical price data and the one-week forecast for SE, a cautious investment strategy with a medium-term perspective is recommended. The historical prices show a volatile trend with fluctuations between $0.215 and $0.242. The forecast predicts a decline in price over the next week, reaching as low as $0.188. This suggests a potential period of consolidation or even a slight downtrend in the short term. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price of $0.235 could be considered, aligning with the current price and the upper end of the recent price range. A stop loss at $0.242 would limit potential losses if the price unexpectedly rises. The target price should be set at $0.205, slightly above the forecasted lowest price, allowing for some profit taking before the market potentially rebounds. This medium-term approach allows for a balanced risk-reward profile, taking advantage of the potential short-term decline while allowing for some room for price fluctuations. Based on the provided Ethereum Classic price information, a cautious investment strategy is recommended. The historical price data shows a relatively stable period with minor fluctuations, while the forecast indicates a downward trend in the coming week. This suggests a potential for short-term profit by capitalizing on the anticipated price decline. Therefore, an aggressive short-term investment strategy would involve taking a short position on Ethereum Classic. The entry price could be set at $20.50, slightly above the current price and within the historical range. The stop loss should be placed at $21, protecting against any unexpected price surges. The target price could be set at $19, aligning with the forecast and allowing for potential profit before reaching the support level. This strategy aims to capitalize on the short-term bearish outlook while managing risk through a well-defined stop loss. Based on the provided Polygon data, a short-term investment strategy appears most suitable. The historical price data reveals a recent upward trend, but the forecast suggests a potential decline in the coming weeks. The support price of $0.2967 acts as a potential floor for the price, while the resistance at $0.4389 indicates the upper limit for the foreseeable future. Given this scenario, a short position could be considered to capitalize on the anticipated price drop. To execute this strategy, an entry price of $0.320 could be considered, slightly above the current price, but below the recent highs. A stop-loss order should be placed at $0.330 to limit potential losses if the price unexpectedly surges. The target price could be set at $0.297, aligning with the support level and allowing for a potential profit margin. This short-term approach aims to profit from the anticipated price correction while mitigating risk through a well-defined stop-loss. Based on the provided data for EVO, a short-term bearish investment strategy appears most suitable. The historical price data reveals a downward trend, with recent prices hovering close to the support level of $0.1488. The forecast price further reinforces this bearish outlook, projecting a decline to $0.113 within the next week. Therefore, a short position is recommended. An entry price of $0.165 aligns with the current price and allows for potential profit from the anticipated price drop. A stop loss at $0.1701, slightly above the current price and the resistance level, helps mitigate risk. The target price should be set at $0.1488, aiming to capture a significant portion of the potential decline while avoiding unnecessary risk. Based on the provided price history and forecast for optimism, a cautious investment strategy would favor a short-term approach. The historical price data reveals a fluctuating pattern, with recent prices hovering around the $1.12 mark. The forecast suggests a potential decline in the coming week, reaching as low as 96 cents. This indicates a bearish outlook in the short term. Therefore, an investment strategy involving a short position on optimism appears prudent. A suitable entry price would be $1.12, aligning with the current market price. The stop loss should be set at $1.16 to limit potential losses if the price unexpectedly rises. The target price for this strategy would be 98 cents, allowing for a reasonable profit margin while staying ahead of the projected price decline. This approach capitalizes on the anticipated downward movement while mitigating risk through a well-defined stop loss. Based on the provided price history and forecast for STRK, a cautious short-term investment strategy appears most suitable. The historical price data reveals a downward trend, with the recent price hovering around 23 cents. The forecast further suggests a continued decline over the next week, reaching as low as 17 cents. This bearish outlook indicates a potential for short-term profit by capitalizing on the anticipated price drop. Therefore, an investment strategy involving a short position is recommended. An entry price of 24 cents would allow for entering the trade near the current price level. The stop loss should be set at 25 cents to limit potential losses if the price unexpectedly rebounds. The target price could be set at 18 cents, aiming to capture a significant portion of the anticipated decline. This strategy prioritizes risk management by setting a stop loss and focuses on capitalizing on the short-term bearish momentum predicted by the forecast. Based on the provided historical price data and forecast for Solana, a cautious investment strategy appears appropriate. The 2-week price change shows a slight downward trend, and the forecast indicates further declines over the next week. While the support price is relatively strong at $180.52, the resistance level at $198.61 suggests limited upward potential in the near term. Considering these factors, a short-term position on the short side seems more suitable. An entry price of $196, aligning with the current price and recent lows, would allow you to capitalize on any potential downward movement. Setting a stop loss at $199, slightly above the current price, protects against unexpected price surges. The target price should be set at $182, aiming to capture a potential decline towards the support level. This strategy prioritizes risk management and capitalizes on the current bearish outlook for Solana in the short term. Based on the provided price history and forecast for Jupiter, a cautious investment strategy with a medium-term perspective appears most suitable. The recent price action has shown some volatility, with a slight downward trend over the past 2 weeks. However, the forecast suggests a potential for a modest recovery in the coming week. Given this outlook, a long position could be considered. An entry price around 85 cents could be a good starting point, allowing you to buy in at a price slightly below the current market value. The stop loss should be placed at $0.824 to limit potential losses if the price continues to decline. A target price of $0.952, aligning with the recent resistance level, would provide a reasonable profit target. This strategy allows for capitalizing on a potential price rebound while mitigating risk with a well-defined stop loss. The provided data for render indicates a bearish outlook for the short term. While the historical price shows some fluctuations, the 2-week price change reveals a downward trend. Furthermore, the forecast price suggests a continued decline over the next week, reaching as low as $3.73. This downward trajectory, coupled with the support price at $4.12, suggests a strong potential for a short position to be profitable. Therefore, an aggressive short-term investment strategy for render would involve entering a short position at the current market price, with a stop loss set at $4.47, slightly above the recent resistance level. This stop loss protects against any unexpected price surges. The target price for this short position would be $3.99, aligning with the forecast and allowing for a decent profit margin before reaching the support level. This strategy capitalizes on the anticipated price decline while mitigating potential losses. Based on the provided price information for Solana name service, the current price trend appears to be bearish, with a downward trajectory over the past 2 weeks. The forecast price also suggests continued decline, reaching as low as $0.121 in the coming week. The support price of $0.1366 provides a potential floor for the price, while the resistance at $0.1522 indicates a significant hurdle for any upward movement. Given this bearish outlook, a short-term investment strategy focusing on a short position is recommended. A suitable entry price would be around $0.146, aligning with the current price and the anticipated downward movement. The stop loss should be placed slightly above the entry price at $0.149 to minimize potential losses if the price unexpectedly rises. The target price can be set at $0.136, aiming to capitalize on the forecasted decline towards the support level. This strategy allows for potential profits from the short-term price drop while managing risk through a well-defined stop loss. Based on the provided information for Doge-Coin, a short-term investment strategy appears most suitable. The historical price data shows a recent period of consolidation, with prices fluctuating between $0.246 and $0.272. The forecast predicts a slight dip in the coming week, with prices potentially dropping to around $0.252. Considering this downward trend and the relatively low support price of $0.246, a short position could be considered. An entry price around $0.265 would allow for capitalizing on any short-term price decline, while a stop loss at $0.272 would limit potential losses. The target price could be set at $0.248, aiming to capture a portion of the predicted price drop. This strategy focuses on a quick turnaround, capitalizing on the anticipated short-term price movement before the market potentially stabilizes or reverses. Based on the provided price information for PEPE, a cautious investment strategy appears most prudent. The historical price data reveals a fluctuating trend with no clear upward or downward momentum. While the forecast suggests a potential decline in the coming week, it's important to note that the price remains relatively close to its support level. Therefore, I recommend a short-term, neutral position. A suitable entry price would be around $0.000000970, aligning with the current market price. The stop loss should be set at $0.000000960, a level slightly below the recent price lows, to minimize potential losses. The target price could be set at $0.0001010, aiming to capture a modest profit if the price rebounds towards its recent highs. This strategy allows for participation in the market without taking on excessive risk, given the uncertain price outlook. Based on the provided information for SHIB, a cautious investment strategy is recommended. The 2-week price change shows a slight downward trend, and the forecast predicts further declines. While the support price at $0.0000149 offers a potential floor, the resistance at $0.0000212 suggests limited upside potential in the near term. Given this outlook, a short position could be considered to capitalize on the anticipated price decline. An aggressive short-term strategy could involve entering a short position at the current price, around $0.0000163, with a stop loss set slightly above the recent high of $0.0000170. This would limit potential losses if the price unexpectedly rises. The target price could be set at $0.0000149, aligning with the support price and offering a reasonable profit margin. This strategy aims to capitalize on the short-term bearish momentum while managing risk through a well-defined stop loss. Remember, this is a high-risk, high-reward strategy and should be approached with caution. Given the provided price history and forecast for Dog with Hat, a cautious investment strategy is recommended. The historical price data shows a downward trend, with the forecast indicating further declines in the coming week. The current price is hovering near the support level of 65 cents, suggesting potential for further downside movement. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price of 67 cents, slightly above the current price, allows for some room for price fluctuation before entering the trade. The stop loss should be set at $0.726, the resistance price, to limit potential losses if the price unexpectedly rises. The target price should be set at 55 cents, aligning with the forecast and offering a reasonable profit potential. This strategy aims to profit from the expected downward movement while mitigating risk through a well-defined stop loss. Remember, this is a short-term investment strategy based on the current price trends and forecast. Based on the provided price information for Doge-Coin, the historical data suggests a fluctuating price pattern with a recent upward trend. However, the forecast indicates a potential downward correction in the coming weeks. The support price at $0.002551 provides a potential floor for the price, while the resistance at $0.006149 acts as a ceiling. Considering the conflicting signals from historical data and the forecast, a cautious approach is recommended. A suitable investment strategy would involve a short-term position with a focus on capitalizing on potential price fluctuations within the next 2 weeks. An entry price of $0.00303, near the current price, would allow for participation in the potential downward correction. The stop loss should be set at $0.00312 to limit potential losses if the price unexpectedly surges. The target price could be set at $0.00275, aligning with the lower end of the forecast and providing a reasonable profit margin. This strategy allows for capitalizing on potential short-term price movements while mitigating risk through a defined stop loss. Given the provided price history and forecast for Near Protocol, a cautious investment strategy is recommended for the medium term. The historical price data shows some volatility, with fluctuations around the $3.20 support level. The forecast indicates a potential downward trend in the coming weeks, with prices potentially dropping below the current levels. Therefore, a short position on Near Protocol is suggested for a medium-term investment horizon. An entry price around $3.30 would allow you to capitalize on the potential decline, with a stop loss set slightly above the recent high of $3.55 to limit potential losses. The target price could be set around $3.10, which aligns with the lower end of the forecast range and provides a reasonable profit target. This strategy aims to profit from the anticipated downward price movement while managing risk through a well-defined stop loss. Based on the provided internet computer data, a cautious short-term investment strategy appears most suitable. The 2-week price history reveals a fluctuating trend, with recent dips suggesting a potential bearish momentum. The forecast further reinforces this bearish outlook, projecting a decline in price over the next week. While the support price offers a potential floor, the resistance level is considerably high, indicating a challenging climb for bulls. Therefore, a short position on internet computer is recommended. An entry price near $7.04, aligning with the recent lows, would be prudent. A stop loss should be placed slightly above the entry price, around $7.13, to minimize potential losses if the price unexpectedly surges. The target price could be set around $6.51, the lowest point predicted in the forecast, allowing for a reasonable profit margin. This strategy capitalizes on the anticipated short-term price decline while managing risk effectively. Injective's price history demonstrates a downward trend over the past 2 weeks. The forecast predicts further declines in the coming week, with prices potentially dropping to $12. This bearish outlook suggests that a short position on Injective is the most suitable strategy. An aggressive short-term investment strategy could involve entering a short position at $14, aligning with the current price and the historical downward trend. To manage risk, a stop-loss order should be placed at $14.50, slightly above the current price, to protect against unexpected price surges. The target price could be set at $12.50, allowing for potential profits while leaving room for the price to reach the forecasted lows. This strategy capitalizes on the anticipated decline in Injective's price and aims to achieve short-term gains within the next week. Given the price trends and forecast for BTC, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend in the last 2 weeks, with the forecast indicating further declines. The support price is at $318, which could act as a potential buying opportunity if the price rebounds. However, the resistance is at $387.40, suggesting that it might be difficult for the price to break above this level in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy would involve entering a short position at $375, aligning with the current price. The stop loss should be set at $387.40 to protect against any unexpected price surge. The target price should be set at $318, aiming to profit from the potential decline towards the support level. This strategy aims to capitalize on the short-term bearish momentum while managing risk effectively. Given the provided price data and forecast for THETA network, a short-term bearish investment strategy is recommended. The historical prices show a downward trend, with the forecast indicating further declines. The price has been hovering around the $1.30s and is predicted to drop to the $1.10s within the next week. This suggests a high probability of a continued downward movement in the short term. Therefore, a short position is advisable to capitalize on this anticipated decline. An entry price of $1.35 would allow for entry at the current price level, with a stop loss set at $1.40 to limit potential losses if the price unexpectedly surges. The target price should be set at $1.18, aligning with the lowest forecast price and allowing for a substantial profit margin if the bearish trend plays out as expected. Based on the provided information about WorldCoin, a short-term bearish strategy appears to be the most suitable approach. The 2-week price change demonstrates a downward trend, and the 1-week forecast predicts further declines, suggesting a bearish market sentiment. The historical prices, ranging from $1.21 to $1.29, indicate a consolidation phase within a broader downward channel. The support price at $1.067 and the forecast price, which drops to as low as $0.958, highlight the potential for significant downside movement. Therefore, an aggressive short-term investment strategy would involve entering a short position at $1.29, aligning with the current price near the resistance level. The stop loss should be set at $1.32, slightly above the recent high, to protect against unexpected price surges. The target price would be $1.07, aiming to capitalize on the anticipated decline towards the support level and the forecasted price. This strategy capitalizes on the bearish market sentiment and the potential for a significant price drop in the short term. Based on the provided price information for Hooked Protocol, a short-term bearish investment strategy appears to be the most suitable. The 2-week price change shows a downward trend, and the forecast indicates further declines in the coming week. The price is currently hovering near the support level of $0.1748, suggesting a potential for further downward movement. Therefore, an aggressive short-term investment strategy would involve taking a short position on Hooked Protocol. A suitable entry price would be around $0.211, aligning with the current price. The stop loss should be set at $0.221 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.175, which is slightly above the forecasted lowest price and allows for capturing potential profits before the market reaches major support. This strategy capitalizes on the anticipated price decline and aims to generate profits within a short time frame. Given the price trends and forecast for Artificial Superintelligence Alliance, a cautious investment strategy would focus on a short-term approach. While the historical prices show some fluctuations, the forecast suggests a downward trend over the next week. This indicates a potentially bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.789 aligns with the current price and the forecast's initial decline. The stop loss should be set at $0.824, slightly above the recent high, to protect against any unexpected price recovery. The target price should be set at $0.703, aligning with the lowest forecasted price, allowing you to take profits before the market potentially hits major support. Polkadot's recent price history shows a fluctuating trend with a slight upward bias. Although the forecast suggests a potential decline in the coming week, the historical data and current price point near the support level indicate a possibility of a bounce back. Considering these factors, a short-term long position in Polkadot appears to be a suitable strategy. An entry price of $4.80, slightly above the current price, would allow for a potential upside move towards the resistance level. A stop-loss order at $4.51, the support price, would protect against significant downside risk. The target price could be set at $5.16, aligning with a recent high point and offering a reasonable profit margin. This strategy capitalizes on the potential for a short-term rebound while managing risk through a well-defined stop-loss order. Filecoin's recent price history shows a fluctuating trend with a slight downward bias. The forecast predicts further declines over the coming week, suggesting a bearish outlook. Considering this downward momentum and the forecast, a short-term short position strategy seems appropriate. An entry price of $3.35, slightly above the current price, allows for potential profit if the price drops towards the forecasted levels. The stop loss should be set at $3.45 to limit potential losses if the price unexpectedly rises. The target price could be set at $3.05, aiming to capture a significant portion of the predicted decline while avoiding excessive risk. This strategy capitalizes on the anticipated bearish trend in Filecoin, offering a potential for short-term profit. Given the provided price information for Conflux, a cautious investment strategy is recommended. While the historical price shows some upward movement, the forecast indicates a potential decline over the next week. The current price is relatively close to the support price of $0.107, suggesting a potential for further downside movement. Therefore, a short-term short position is suggested. An entry price of $0.118 could be considered, with a stop loss set at $0.122 to limit potential losses. The target price should be set at $0.107, aligning with the support price, allowing for potential profit from the anticipated decline. This strategy prioritizes risk management and aims to capitalize on the short-term bearish outlook indicated by the forecast. Based on the provided Ethereum name service data, a cautious short-term investment strategy appears most suitable. The 2-week price history reveals a relatively stable period around $25, with a slight downward trend. The 1-week forecast predicts further decline, suggesting a bearish outlook. Given the support price at $25.22 and the resistance at $30.82, entering a short position appears prudent. An ideal entry price for this strategy would be $26, aligning with the recent price action and the forecast. To manage risk, a stop loss should be placed at $27, protecting against any unexpected upward movement. The target price, aiming for a conservative profit, could be set at $24, slightly above the support level. This strategy capitalizes on the anticipated price decline while mitigating potential losses. Given the price trends and forecast for Avalanche, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price sits at $22.70, indicating a potential floor for the price. The resistance is at $25.89, suggesting limited upside potential in the near term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $24.50 would be ideal, aligning with the forecasted price and providing a cushion above the support level. The stop loss should be set at $25 to protect against any unexpected price recovery. The target price should be set at $23, allowing you to take profits before the market hits major support at $22.70. Based on the provided Bitcoin price history and forecast, a cautious short-term investment strategy appears most suitable. The historical data shows a recent downward trend, with the forecast indicating further price declines in the coming week. This suggests a bearish outlook for Bitcoin in the short term. Given the price forecast, a short position would be advisable. A potential entry price for this strategy could be around $0.034, slightly above the current price, allowing for a small buffer against immediate price fluctuations. The stop loss should be set at $0.0353, slightly above the recent resistance level, to limit potential losses if the price unexpectedly rises. The target price could be set at $0.0315, aligning with the lowest predicted price in the forecast, allowing for a reasonable profit margin while mitigating the risk of chasing the bottom. This strategy focuses on capitalizing on the anticipated price decline while managing risk through a well-defined stop-loss order. Based on the provided information for PENDLE, a medium-term investment strategy appears most suitable. The historical price data reveals an overall upward trend, with recent fluctuations around the $3.50 mark. The support price at $3.45 suggests a potential floor for the price, while the resistance at $3.587 indicates a ceiling for near-term growth. The forecast price suggests a slight pullback in the coming week, potentially reaching the support level before resuming an upward trajectory. Therefore, a long position is recommended for this medium-term strategy. An entry price around $3.45, close to the support level, allows for a lower risk entry point. The stop loss should be set slightly below the support price at $3.40 to minimize potential losses. The target price could be set at $3.60, aiming to capture a potential upside move towards the resistance level. This strategy capitalizes on the expected price recovery while managing risk through a well-defined stop loss. Based on the provided The Sandbox price data, a short-term bearish strategy appears to be the most suitable. The historical prices show a slight downward trend over the past 2 weeks, with the forecast indicating further declines in the coming week. The forecast suggests a potential drop from the current price levels towards the support price of $0.3684. Therefore, an aggressive short-term investment strategy could involve entering a short position around the current price of $0.392. A stop-loss order should be placed at $0.406, slightly above the recent high, to limit potential losses. The target price could be set at $0.368, aiming to capture a portion of the anticipated decline towards the support level. This strategy capitalizes on the bearish momentum indicated by both historical prices and the forecast, while incorporating risk management measures to protect against unexpected price movements. Given the historical price trends and the provided forecast for Decentraland, a cautious investment strategy focusing on the short term appears most suitable. The historical data reveals a fluctuating price pattern, with recent dips and recoveries. The forecast indicates a potential further decline in price over the next week, reaching as low as $0.285. This suggests a bearish outlook in the short term. Therefore, a short position on Decentraland is recommended. An aggressive entry price could be 33 cents, aligning with the current price and the resistance level. A stop loss should be placed at 34 cents to minimize potential losses if the price unexpectedly rises. The target price could be set at 30 cents, allowing for a modest profit if the forecast holds true. This strategy aims to capitalize on the anticipated price decline while managing risk through a defined stop loss. Based on the historical price data and the provided forecast for ENG coin, a cautious short-term investment strategy is recommended. The price history shows some volatility, but the recent trend suggests a slight downward movement. The forecast further reinforces this bearish outlook, predicting a decline in the price over the next week. Therefore, a short position is advisable to capitalize on this anticipated price drop. An entry price of $0.125 aligns with the current price and the forecasted decline. The stop loss should be set at $0.128 to limit potential losses if the price unexpectedly rises. The target price can be set at $0.112, which is slightly above the lowest forecasted price, allowing for profit taking before the price potentially reaches its support level. This strategy aims to minimize risk while maximizing potential returns in the short term. The historical price data for Uniswap reveals a fluctuating trend over the past 2 weeks. Although there have been some upward movements, the forecast price suggests a downward trajectory in the coming week. Considering the downward trend in the forecast and the relatively low support price, a short-term bearish strategy appears more suitable. An aggressive short-term investment strategy would involve entering a short position at the current price of $9.82. The stop loss should be placed at $9.93, the recent high, to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $8.99, the support level, aiming to capitalize on the predicted price decline. This strategy capitalizes on the short-term bearish outlook while managing risk through a well-defined stop loss. Chainlink's recent price history reveals a downtrend, with the price hovering around the $18 level. The forecast projects further declines, suggesting a bearish outlook in the short term. Considering the price trends and forecast, a short position on Chainlink appears to be the most suitable strategy. To capitalize on this anticipated decline, we can set an entry price at $18.50, slightly above the current price, allowing for a small buffer against potential fluctuations. A stop loss at $19 would safeguard against unexpected price surges, while a target price of $17.50 offers a potential profit margin. This strategy focuses on a short-term investment horizon, aiming to profit from the anticipated price drop within the next week or two. The rationale behind this approach is based on the bearish price forecast and the current downtrend observed in the price history. By entering a short position at a slightly elevated entry price and setting a well-defined stop loss and target price, we aim to mitigate risk while maximizing potential returns within this short-term timeframe. Based on the provided information for Aave, a short-term bearish strategy appears to be the most suitable. The 2-week price change shows a downward trend, and the forecast indicates further declines in the coming week. While the support price sits at $243.95, the forecast suggests a drop towards $232, implying a potential for profit from short selling. To implement this strategy, an entry price of $253 would be appropriate, aligning with the current price and offering room for potential price decline. A stop loss at $257 would protect against unexpected upward movements. The target price should be set at $239, aiming to capture a significant portion of the potential price drop while staying ahead of the predicted support level. This strategy capitalizes on the current bearish momentum and aims to generate profits within a short time frame. Based on the provided EOS price data, a cautious medium-term investment strategy appears most suitable. The historical price shows some volatility but generally trends upwards. However, the recent forecast suggests a slight dip in the coming weeks. This indicates a potential buying opportunity as the price is likely to find support around the $0.5792 level. Therefore, a long position is recommended with an entry price around $0.590, slightly above the forecasted lowest price. The stop loss should be set at $0.5792, aligning with the support level, to minimize potential losses. The target price can be set at $0.665, which represents a reasonable upside potential based on the recent historical highs. This strategy allows for capitalizing on the potential upward movement of EOS while mitigating risk through a well-defined stop loss. Based on the provided Tron price information, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a recent upward trend, with Tron breaking above the 23 cents resistance level and approaching the 24 cents resistance. The forecast indicates continued upward momentum, with prices projected to reach $0.244 within the next week. This suggests that Tron is in a bullish phase, making a long position a viable option. An ideal entry price for this strategy would be around $0.238, aligning with the recent price action and the forecast. A stop loss order could be placed at $0.232, below the recent support level, to mitigate potential downside risk. The target price for this medium-term investment could be set at $0.246, aiming to capture the anticipated price increase towards the resistance level. This strategy allows for potential profit while managing risk within a reasonable time frame. Based on the provided information for Suncoin, a medium-term investment strategy appears most suitable. The historical price data suggests a generally upward trend, with recent fluctuations around the $0.019 mark. While the forecast predicts a slight dip in the near term, it still indicates a potential for upward movement within the next 2 weeks. This suggests that a long position could be beneficial, allowing investors to capitalize on the potential price increase. An optimal entry point would be around $0.0189, aligning with the support price and the forecast dip. A stop loss order could be placed at $0.0181, below the recent lows, to mitigate potential losses. The target price could be set at $0.0197, slightly above the resistance price, allowing for a reasonable profit margin if the upward trend continues. This medium-term approach allows investors to ride out potential short-term volatility while aiming for gains in the medium term.